Will this investment strategy make you as wealthy as Elon Musk? It seems that Elon Musk is always in the news. Even as the US suffers through the second wave of the COVID-19 pandemic, race riots, and tens of millions unemployed, Musk has just collected Tesla options worth up to $770 million. That was Musk's reward for achieving some of Tesla's operational goals, and most importantly, keeping the market value of Tesla above $100 billion for the past 6 months. Nice work if you can get it. Musk fascinates the American public. Musk fans believe he is humanity's last and greatest hope. He's a showman prone to exaggeration, and he has used his larger-than-life personality to generate a fortune now greater than that of Warren Buffett. Alas, we mortals must focus on less glamorous ways of making money in the market. Thanks to the surprising US stock market rally, we investors are doing just that. But what if I told you that there was another set of financial markets trouncing the returns of the US stock market? And if history is any guide, these markets will continue to outperform over the next 6 months. Let me explain. Emerging markets have always been the redheaded stepchild of investing. But it may be hard to believe, but between 2003 and 2007, emerging markets were the top performing asset class in the world. With consecutive annual returns of 55.8%, 25.6%, 34%, 32.2%, and 39.4%, over those 5 years, you could turn a $10,000 investment into $48,304. The contrast with today could hardly be greater. Emerging markets have lagged the US markets ever since that previous boom period. If you're an average US investor, you probably hate emerging markets. And with all that is going on in the world, emerging markets may be the last place in the world you'd want to put your money at risk. But here's why I think you may be very wrong. Much like risky bets on biotechnology, emerging markets are a boom or bust asset class. If the mood is right, investors pile in and drive stock prices sky high. When emerging markets do enter a bull market, they'll do so in a big way. And the recent action in emerging markets suggests that they may be on the verge of doing just that. SentimentTrader.com recently highlighted the remarkable technical strength of emerging market stocks. The iShares MSCI Emerging Markets ETF, ticker symbol EEM, had put together its longest streak of winning days ever since its inception in 2003. The other 5 times it put together streaks of at least 3 days, it averaged an impressive 13.6% return 2 months later. 6 months later, the average return soared to a whopping 29.9%. So, how best to ride the emerging markets bull? With the explosion of ETFs, you have more ways to ride the emerging markets bull than you did in the last bull run. First, you can invest in a broad-based emerging markets ETF like the iShares Emerging Market ETFs I discussed above. But if you believe we're in a bull market, why not swing for the fences? And the best way to do that is with a leveraged emerging markets ETF. The ProShares Ultra MSCI Emerging Markets ETF, ticker symbol EET, delivers double the daily performance of the MSCI Emerging Markets Index. The Direxion Daily MSCI Emerging Markets Bull 3X ETF, ticker symbol EDC, is a triple leverage version of the MSCI Emerging Markets Index. Just make sure you have a stomach for volatility. Time your investment right in one of these leverage ETFs and you set yourself up for a year of absolutely monster returns. So will emerging markets make you as wealthy as Elon Musk? No, they won't. But if history is any guide, investing in emerging markets ETF between now and the end of the year will get you a lot closer.